Today we are gonna discuss coal mine sector industry for big cap stocks in Indonesia stock market. So what we are talking about the big cap stock for the mining industry is with the asset above 20 trillion Indonesian rupiah. There are four companies uh, from largest to the smallest: Bumi Resources, Adro Energy, Brau, and Born, the stock code. Those three coal mines, namely Bumi, Brau, and Born, have some kind of group relationship. They belong to the one group with have cross ownership with between or among them, interest ownership, and etc. Only Adaro Energy being independent. So next, we would like to see in brief the general market of coal price globally. We represent two charts. The left is in the 5 years period, in the last 5 years from 2008 to 2012. The price of the coal is quite stunning in period of 2008-2009. At that time, coal price increasing very sharp from around $60 and hit almost $140 in about less than 6 months time. And the next or the second 6 months after that, the price also declining or free fall is below 60 or above 40. So this kind of movement is very speculative. So that's why stock in the coal mine has been chasing by some traders or the love by the market, because stock in this industry can produce very high capital gain, but on the other hand can make the trader loss quite amount or a very huge amount of money in a very short time. If we see the movement of the coal price after 2009, so still fluctuated up and down, but it's not so high and down compared to 2008. Is it about around 45 to 80 or 50 to 81 US dollar. After or 29 until today we can see the more clearer chart on the right. Is a 12-month chart from 2012 until today. Still fluctuation, but the fluctuation will have a delta of 50% up and down. So next we are gonna talk about the profile of the company. Bumi is the biggest one, engaged in the exploration and exploitation of the coal. They also have gold, iron, etc. The company is the biggest, and second one is Adro. the highlight of this company, Agro Energy, they have the extensive infrastructure, 75-kilometer whole road to support its operation. And the last two is Born. Is a number. Actually, the number 3 is Brau. Brau highlight is they have the estimated coal reserve for 67 million tons, and then very huge area, 118,400 hectares. All four companies located main operation in Kalimantan, whether East Kalimantan or South Kalimantan. So let's check to the biggest Bumi resources. You see in this presentation, 2010 is marked by interest of the Rothschild company using its subsidiary Valar PLC to acquire some share, invested $3 billion plus 2 billion loan, and the interest is executed in the year after 2011. At that time, growth of the turnover is 74%, especially in the 2008. In the 2008, after recovery, is the performance is very amazing. The performance increased very sharp. The price also reached 3,500 from about 500 or less than 500, the lowest price at that time, the bottom price, and continue stable until 2010, and then they go around to 2,600. About 2,500 to 3,500, something like that. And if we are talking about the intrinsic value of the company, is range from the 2,600 to 7,100. So looking at that, the maximum or the highest band of the intrinsic value, the price even in the 3,000 or 3,005 is still undervalued according to the stock valuation calculator. But astonishing is in the 2012, the valuation dropped to below 100, below 1,000. It is very, raising a big question mark. Why the drop is so high and then like a free fall? At that time, the net profit after tax also free fall, negative 60%. After it rose 80% in 2010. Is it considered natural cause, or is it really a bad management? Some people also blame to the coal price, but after we saw the previous presentation on the coal price in the period of 2010 2011, with the fluctuation of 50%, I don't think we don't think that the company such Bumi Resources, who had long-term contract with a big company like Sumitomo, Mitsui, Tokyo Power, and the other big guys, the long-term contract is protected downside, even though it's not all, but at least the price escalation is already discussed, and then there is some margin, some risk-free escalation that agreed by both companies. Company also trying to cut that capital expenditure, but it doesn't help because the main problem is the drop in the bottom line. The net income after tax is down minus 60%. The most important thing is looking at the operating costs. Operating cost basically gross profit uh, deducted by operating cost, we can get the net profit. Yeah. So this very important thing that operation cost in 2010 around 65-66% of the gross profit, and in the 2011 operating costs increased significantly to 86%. So the normal operating cost, it should be quite stable. It should be quite stable because it's basically it should be more fixed cost involved in this operating cost. Depend on the cost of goods sold or the direct cost related to the gross revenue, or the total production is related to how much production that the company produce. Next is we see still the free cash flow revenue analysis on the year 2012 until today. True value again keep falling down. Previous is about 800, is now below 100. So this is quite surprising, and there is no wonder that the partner, the Rothschild, represented by Nathan Rothschild, is not very happy in this situation, and they demand the investigation, and then Bumi management also refused to receive the investigation from the party whom they don't know, or whom they don't recognize. So the reviews of the Bumi that raised the issue that Rothschild accusing Bumi to make a cheating, abuse, or the malpractice of this running of this company. And also they call Nathan called the media to publish such an issue. It is a big blow for both, but mostly I think it's for Bumi management, the owner of Bumi, because having the bad reputation or bad publication in the international media is not a good news. It's gonna be ruin their financial credibility in global market. So you see in the free cash flow also going to negative, income always negative along the way 2012 until today, and it's very difficult situation. Then the Rothschild decided to leave or to quit from this partnership. So next is we want to show you some correction of this audited report. In the stock market, usually the annual report or the quarter for a report must be presented by audited report by a public accountant. So there is it should be credible report and then trusted. You see in this circle marked in red, and then there is an arrow in blue. You see in the report of December 2011, the revenue is corrected from the previous year, the same year 2010, from 4.3 billion or 4.3 billion US dollar to 2.9 billion US dollar. I think it is a big blow. I mean, it is not normal. Is it intolerable? Because the correction is so big difference. Is it? I think it's more than 30%. It's almost 40%. The different the record of the revenue. Of course, the calculation of the intrinsic value is produce a big different number. So this correction will lead. I think it's quite misleading and can be considered cheating, especially for the Rothschild who's been in the company as an investor. So this also reduce the trust, reduce the confidence of the market as a in general, especially people from the global market. They they lose the confidence on how such a practice happen in Indonesia. So who takes all the blame? It's very difficult. We can appoint company or health responsible, public accountant health responsible, or the government, the stock market authority also health responsible. Reviews, we talk about the turnover, and next we are talking, we want to see the what other correction is. You see in this presentation the net income also been corrected. I think from 540 US dollar to 266 is about around 50% different. You know, in this our stock valuation calculator, the two most important thing inside the company is average revenue growth represented by revenue turnover, and also net income after tax is the second or the most important also in this calculation. So this situation also is not very good for the reputation of the Indonesian stock market, and then especially in this coal mine business. So next we are going to see the balance sheet side of the Bumi Resources from 2008 to 2011. The 2008 also marked in this highest growth in top line, bottom line. So negative balance sheet, liquidation value. Negative is it doesn't have a threat because the growth is so high and then quite attractive, and the company is quite promising that they are able to cover what deficit in this balance sheet if we took all the total debt. But if you are talking about the working capital, there's even though they are also still negative, because you see that current asset is 17.3 billion US dollar, and we compare to the short-term debt is 23 billion US dollar. Is it negative working capital? But still the growth is so high, so it doesn't matter at that time. It doesn't present a risk at all. But along the way, going forward, up to 2009, 2010, and then the growth fell down, and then especially in this 2011, that the drop in the net profit is so deep, so they present again a big risk that never been reduced, also only restructured uh, by doing the exchange offer strategy, that they issue a new bond in order to pay off the previous or the older bond that's coming due. So this is not a wise strategy, but market maybe will support if the growth is quite significant in this an over or a bottom line. So equity also fell, financial ratio fell, gross margin is still stable, but again we hope to see that operating costs basically rose more than 80%. It is quite high for a company. Usually operating cost is about 60%, but more than 80% that present that inefficient cost structure, inefficient in the company running the operation. So next is we see the balances after 2011, 2012 until today. Gross margin previously 35%, now it's dropped around 20% to 30%, or even uh, stay in the 21%. Operating cost, of course, because it's running losses, they rose about 120 to 170 above gross profit margin. So next we are going to see the Adaro Energy. We see the 2010 until today. The company also enjoyed the significant growth between 2010 2011, and then the growth rate is slowing down in 2012, and then negative in this 2013, negative 20%. Earning after tax is more depressing. In 2013 Q1, the profit fell down to negative 57%, is quite big drop. Operating ratio increased from the average 60% previously to 75% in 2013. So as matter of fact, is it I mean, the company in this industry is suffering slower growth in this 2012-2013. However, Adaro in this case is more cost efficient than Bumi during 2010-2011. In this year, company also trying to cut the capital expenditure down to 20 times, because we don't record it or put in this calculation or of the capital invested under construction. But it doesn't help, because the bottom line again is down almost 60%, so it's difficult to get the intrinsic value maintained in the same level as a year before. So we see the balance sheet side of the company. Balance sheet also increases in the period 2010-2011 and went down year after 2012 2013, and then especially for 2012 to 2013, the balance sheet is negative in liquidation value. So I think because this the 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 company is running the slower growth or negative growth. If you see the working capital of Adaro is still positive despite the margin drops quite deep. But they can still maintain the debt equity ratio in the same level below 2, but still above 1. So Q3 prediction, if it will be drop continue, if the bottom line don't improve, so capital expenditure will finish the construction. You will put it big number for the capital expenditure. So the Q1 prediction will be not the same as the Q1. The Q2 will be dropped. So overall, Andro asset and turnover is also closing gap to Bumi. I mean, the size of the Andro is almost to Bumi at the, I think in the year to come. If Bumi can resolve the problem, I think it's no wonder that Agro will take over Bumi position as the biggest coal producer or a coal company in terms of the asset and then turnover. So next one is the Berau Coal Energy. So data not so complete, is only until Q3 2012. So we see from the beginning the sharp increase on the 2010 to 2011, but the same as the rest is 2012 declining. Intrinsic value also dropped very sharp in the Q3 2012. Before is about above 500 and then down in the Q2 it was 320, but in the Q3 it dropped to 45. So it is a quite significant drop because in the Q2 Berau suffered the second consecutive loss, but the operating cost non-operating gain in 2012 make the free cash flow still positive. You see the non-operating gain received from fixed asset sales, gain in the foreign exchange, etc. So top line also drop, but it's only small number, only about -3, -2%, and the significant issue, gross profit is not the significant issue, but the significant issue is the profit going to the losses, from the profit to the losses. So if we calculate the operating cost is increased very sharp from the 2.5 billion in 2010 to 2011, increase to 4.5 billion. It's quite big increase. Operating cost is very important, otherwise if they cannot reduce, so it's very difficult to cover or to suffer in the negative net profit, in the negative loss. So company must reduce operating costs down to the level of 2.5 billion US dollar, so to be able to maintain the profitability of the company. So next we see the balance sheet of the Brow Coal Energy. You see the deficit of the balance sheet starting from 2011 until today, I believe. And then also for the working capital also in negative value. It doesn't help if the growth of the company is very slow, and then the profit is not so high, so it's very difficult. Intrinsic value, you bet, will be going down. Another important part is that equity ratio is above standard, is below, above the 3.0 is very high, and presenting very high risk, having the highly leveraged company kind of this Brow Coal Energy. So even though the gross margin is quite stable, but the net profit margin is small and decreasing. Return on equity 2010 to 2011 also above standard, is below standard, is 2010 to 2011 is good, is 50%, 37% is above standard, but in the 2012 is dropped to 13 and also negative in the next quarter. So next we see the smallest company of the four, the Borneo Lumbung Energy, also belong to group of the Bumi Resources, the same as Brow Coal. So again is the same pattern, drop in the 2012, top line growth, even though it still can be maintained the same, but the bottom line drop 50%. Non-operating cost maybe can be checked, be able to keep the free cash flow in positive position, but again the operating cost is increasing while the bottom line is declining. So company need to streamline operating cost by make some cost efficiency to be able to maintain the profitability. So if we see next is on the balance sheet side of it, gross margin is quite good, but profit margin decreasing as presented in the previous chart. You see that equity ratio also increasing, but still in the 2010 and 2011 is still below 1, which is good, but after that is closing to 2.0. Is present a big risk for the company also. So that's all the industry analysis in the coal mine big caps company. So we will see you next in the under industry analysis. Thank you.